Now have a live 45-minute panel discussion on the challenge of communicating sustainability impact and ambitions post-COVID-19. We have Ryan O'Keefe, Managing Director at BlackRock. We have Alexandra Palt, the Chief Sustainability Officer at L'Oreal. We have Ravi, Sunnak, the EVP of Sustainable Development Goals at Novelli. And we hopefully will have Lisa Ekstrand, Head of Sustainability at Vestas, joining us shortly. Novelli, as many would have seen on the website, are one of the lead supporters in this event, and they're an award-winning communications and purpose agency that have kindly supported this event and definitely are well placed in their expertise to lead the discussion. So as always, we'll be fielding questions from you guys, so do visit slido.com #RBSvirtual, or look to the question box just beneath the fold and you get your questions in, and we'll get to hopefully address some of them in the latter parts of the discussion. But now it's my pleasure to hand over to Ravi.
Thank you very much, Liam, and welcome to everyone tuning into today's panel. As Liam said, my name is Ravi Sunnak. I'm EVP of the Sustainable Development Goals at Novelli, a global purpose communications consultancy. I very much specialize in supporting businesses to follow through on their commitments to be more responsible in terms of their business practices through the Sustainable Development Goals. At Novelli, we work with clients who have an ambition to make a positive impact, to really find, live, and tell their purpose. Novelli is a proud partner of Ethical Corporation by Reuters Events on their virtual Responsible Business Week. So I'm joined by a fantastic panel of experts to discuss how businesses can continue to gain recognition for their sustainability initiatives against the backdrop and the impact of COVID-19. As Liam said, we're accepting questions from the audience, so please send these through the messaging function and we'll address those towards the end of our discussion. So before I jump in with some of my questions, Ryan, Alexandra, and hopefully Lisa soon, thank you for joining us today from your companies BlackRock, L'Oreal, and Vestas. Just to start and kick us off, why don't you give a 2-minute introduction of your business and the role that you play within that organization? And then Alexandra, please can I go to you first?
So, well, thank you very much for the invitation. So to start, well, COVID-19 and the lockdown in France and well, following other countries and a worldwide situation really allowed L'Oreal and I would say all my colleagues from the executive committee to prove something that we have engaged for many years now, which is taking into account all our stakeholders in the development of our policies, leave nobody invisible. And I think that is also what we succeeded and what we tried to do during COVID with our solidarity plan. So just 3 days after the lockdown in France, well, first, of course, it was about our employees and securing and especially making sure for them that they are aware that there is not any consequence on their payroll or on the security of employment, nowhere, and that they had the tranquility of mind and spirit, and also, of course, to guarantee the right security measures for our employees in the plants, because very fast we decided to change our production and to use hand sanitizers all over the world. So 70% of our plants produced hand sanitizers around the world. And we had a solidarity plan that was for our suppliers, a day-to-day payment, meaning that as soon as we receive, normally you have a delay for payment. It was immediate payment in order to guarantee, especially for those who might have issues in treasury, to be on the safe side. On the other hand, for our smaller clients, small farmers, drugstores, small hairdressers, we delayed the payment on their side. We gave donations, hand sanitizers to hospitals, caretakers, but also food distributors, so the big stores, to our hairdressers as soon as they could go back. And we gave donations, but also hand sanitizers and hygiene products to community involvement organizations who took care of the most vulnerable ones. So it was a very complete plan, and we added on this volunteering from our employees, because everybody at L'Oréal, we have a very strong culture of volunteering. And so a lot of people wanted to be able to do something, and so they were able to give lessons, school to support children in difficult social situations, or to call older persons who were isolated. So everybody, a lot of people were able to contribute.
That's fantastic. Thank you very much for sharing that. Ryan, tell me a little bit about BlackRock and the role that you play there.
Good afternoon, everybody. So BlackRock is an asset manager. We are the largest asset manager in the world. We manage, as of the 31st of March, just under $6.5 trillion of other people's money. And I think that's a very important point to note, is that none of the money that we invest into companies or government bonds or any asset class is our own. All of it belongs to our clients, which means that we are effectively a steward for their capital, and we're investing it on their behalf, consistent with their objectives. And the majority of the objectives of the BlackRock clients are for retirement. So we're looking to invest our clients' money over a 10, 20, 30-year time horizon, sometimes even longer, which means that we must, by our nature, be a very long-term investor, which means that, I guess sustainable investing really has to be at the core of everything that we do. I am head of communications for the Europe, Middle East, and Africa, which is a pretty complex business. So in EMEA, if BlackRock in EMEA were a standalone asset manager, it would be the 6th largest asset manager in the world. We manage just under $2 trillion for clients across the region. We have 28 or 29 offices now in 17 or 18 countries. We have 62 different regulators that regulate us across the region. And we've got 5,000 employees and about 3,500 clients. So it's a big, complex business. We face a lot of reputational issues. And I guess there's a lot that we'll get into over the course of the next hour. But I'll leave it there as an introduction to BlackRock.
Sure. No, thanks very much. And Lisa, I think we have you on the line as well.
Yes, indeed.
Tell me a little bit about, great. Well, welcome. Tell me a little bit about Vestas and the role that you play there.
Sure, happy to. And before doing that, just apologize for not being able to connect with my video. I'm having some issues with my camera on my computer.
Not a problem.
So apologize for that. So, okay. So good afternoon. I'm representing Vestas Wind Systems. And for those of you who are not familiar with the company, we are the world's largest wind turbine manufacturer. We are supplying wind turbines to roughly 70 markets around the world, with 25,000 employees. And you could say that, or well, you can say that we pioneered wind energy. We were the first ones out, and now for more than 4 decades we have been supplying a product that is of course key to fight the climate crisis. I mean, we are delivering products that are delivering CO2-free electricity at the end of the day. A few words about myself. I'm the head of sustainability at Vestas, a role that I have since April last year. What is perhaps interesting is also that it's actually a new department within Vestas, but perhaps might come as a surprise to some of you, given the company that we are and operating within the field of wind energy as we are. But also we really felt that it was actually now the time to focus even more on sustainability beyond delivering sustainable products. So with the creation of this department and my role, we are taking we're really increasing our ambition level when it comes to sustainability and taking a full holistic approach to it. And that means that we are now integrating sustainability into also how we run the business, and also having a huge focus on working with sustainability with our suppliers. We launched a brand new sustainability strategy earlier this year, and we are in full execution mode on that right now.
Okay, great. And we'll certainly dive into that a little bit later on. So let me start with the first question. Alexandra, I think you've kind of covered a lot of this off already in your fantastic
exactly.
introduction.
I'm just aware. You should have interrupted me. You're too polite.
That's
I
fine.
immediately
in
went
full
to the
flow.
first question because I had a connection problem. So next time I speak too much and not about the question you asked me, you interrupt me, please. So now I'll do the presentation part of who I am, or how do you want to handle this?
Sure, go on. Tell me a little bit about what you do day in, day out at
No, sorry, I didn't hear you, and so I responded immediately to the first question. So I was out. I was not on the issue, and I apologize. It's not that I don't to our speakers. So my name is Alexandra Palt, and I'm Executive Vice President of L'Oréal, in charge of corporate responsibility issues, which means all our internal transformation, but also all our external contributions, impact investing, L'Oréal Foundation, and I hope we'll have the opportunity to talk about what we are doing, and I try to stick to the issue and the question.
Yeah, you were in full flow, Alexandra, so I wouldn't have dared to interrupt you. Perhaps we can go to you first, Ryan. So the last 2 months have certainly been an extreme challenge for everyone, right? Across geographies, industries, and sectors. COVID has impacted everything from share price, products, employee engagement, employee welfare, public perception. It runs the gamut of absolutely everything. So tell me a little bit about the impact it's had on BlackRock.
So I guess, like everybody, it's been a challenge. I think, we're a business, in many ways, we're a very simple business in that our assets are just people. And so if, you need to continue to operate, all you need to do is figure out how to operate from home. So I say all you need to do, that's no mean feat. And I think it's particularly tricky when you consider that we are trading in hundreds of millions and billions of dollars of our clients' capital every day. And so just sending people home and relying on Virgin Internet or Sky Broadband to trade on hundreds of millions of dollars of stock is probably not a great idea. So that has been a big challenge for us. But we, I think, very, very quickly and very successfully set the business up to operate from 16,000 virtual remote offices from around the world, which has been really, really remarkable. The business is doing extremely well. Clearly, we had a huge contraction in the markets at the back end of February. The Dow Jones Industrial Index lost 10,000 points over the period of that most profound dislocation. So that was a 34% drop in the market. And that had the impact of reducing our assets under management without us, losing a single dollar of clients' money. Just the impact on the market reduced our assets under management from above 7 trillion on the 31st of December to somewhere, I think, well below 6 trillion actually during the quarter. And then, as we all know, the markets came back towards the end of March, and so we ended up at 6.5 trillion. But there was certainly a point in time when we were below 6, which was, I think, pretty, it's quite shocking when you think that $1 trillion of client money just evaporated in such a short amount of time. From a communications point of view, clearly the main challenge for us was ensuring that we were giving people the information they required to be able to effectively do their jobs remotely, and making sure that people continue to feel part of the organization and a sense of solidarity and belonging with their colleagues, even though we weren't able to, see each other and be together. I think those were two of our priorities. From a client perspective, clearly it was important that we continue to show the face of BlackRock, notwithstanding the fact that we couldn't just pop into the Bloomberg studio for an interview. So it took a little while for us to, and for the broadcasters, to work out how they were going to operate remotely as well. That, I think, they sorted that out pretty quickly. And so one of the key things that we did was to continue to show the faces of BlackRock to our clients on television and through the newspapers. And in fact, yesterday we ran an analysis and we saw that we have done, on average globally, 2.5 television interviews per working day since the middle of February, when we all kind of found ourselves in this slightly odd situation. So we've had a huge amount of activity, particularly on broadcast, just to continue to show the face of BlackRock to our clients. It's been, for me personally, I'll say I actually really enjoy working from home, and I'm sure everybody feels this way. There are some serious upsides to working from home. I don't commute, so I use the opportunity to go for a jog in the morning, which is great. I have lunch, as I just did an hour ago, with my little girls downstairs, and that's awesome. Even though I have to say that homeschooling in between a job is a bit of a challenge. There are some definite upsides to it. And I think what we're going to find is that, well, I think probably just about every company in the world has surprised themselves by the way in which and the efficiency with which they've been able to move to remote working. And so I'm pretty certain that whatever this new normal is going to look like when we come out of this situation, it is going to feature a much more significant component of working from home for just about everybody.
Okay, thank you. And Lisa, how has COVID-19 impacted you and your company? And perhaps you can go into a little bit more detail about your particular sector.
Yes, of course, and of course, as for everyone else, this has been for sure a challenging period, and being a global company that we are with a global manufacturing footprint. This really came to our attention quite early. We have manufacturing in China, so already at very early of the year, we had to address that in an effective way. We had to deal with the situation quite early. But what I can say is that for us, what we quickly kind of identified was that we had to keep our business running, but doing so safely. So we basically identified 3 key priorities that we've been working with throughout this entire period, and the first one was really to make sure that we had comprehensive safety measures across the entire company, across all factories, etc., to make sure that we prevent the COVID-19 spread. The second priority was to keep manufacturing, construction, and service operating, and to the extent possible support our suppliers as well. And thirdly, that to making sure that when we exit 2020, that we also come out in a position as strong as we were when we entered the year. So, but perhaps to kind of summarize, what was kind of key for us is and that we found out was that being agile, creative, and acting fast has really proven to be key. And we also can see now some way through into this situation that we are in, after we have been doing quite well in ensuring business continuity across the company. But also, looking ahead, and also outside just our company itself, it's also to make sure, what we are really focusing now is to also really being out there and being vocal about making sure that the global recovery, the world's global recovery is designed to build more sustainable and resilient societies. Because if there's something that this situation has really taught us, that is that that there can be a deep disconnect between expert insights and political decisions, and that can lead to very severe consequences, as we have seen. So for us, it's really about being vocal now about making sure that the recovery that will need to come is green, and not make the same mistake as we've done in the past, and continue subsidize fossil fuels and so on, but really kind of making sure that that renewable energy is a key part of the recovery here. So.
And yes, and we'll certainly come on to that in a couple of questions' time. Alexandra, do you have anything further to add to what L'Oréal is doing, or any kind of initiatives you want to go deeper into? Or you're on mute at the moment. No worries.
Thank you. Well, I said quite a lot, I think, about what we have done, perhaps more what it provoked. Because of course, yes, we had our solidarity plan, but it was also the opportunity to reaffirm our commitment and to even accelerate and go one step further. And I think this is directly related also. So we also always planned to announce our 2030 targets this semester, but we mobilized additional budget in order to respond to the social and environmental crisis that is, well, the social crisis that is also a consequence of COVID-19, and the environmental crisis that is anyway here and going to stay. And so we announced in April L'Oréal for the Future program, which is 150 million euros, 50 million for community involvement organizations on the ground, supporting women and poverty-related issue to the disproportional impact of the crisis on women, and 100 million for environmental impact investing for regeneration of biodiversity and circular economy. And so I think this acceleration is also, of course, linked to COVID-19 and the absolute necessity to respond to the environmental crisis, but also to respond to the preoccupation of society, which is about an inclusive society that allows us to lead the ecological necessary transition.
Great. And then just building upon that, Ryan, there's been L'Oréal spoken about the delivery of their wider sustainability initiatives. What about BlackRock? How has COVID impacted the delivery of your wider sustainability agenda? Have you pivoted? Have you switched tack?
Yeah, it's so interesting, Ravi. We set out back in January a number of initiatives around sustainable investing, so the way in which we deploy our clients' capital. And one of the things that we said was that we expected to see a transition from legacy products. And I think it's worth clarifying that our clients are the ones who choose what type of products to invest in. So 90% of our equity AUM is in fact index, which means that a client will come and say, I would like to be invested in the S&P 500, please. And we just give them the S&P 500, every single one of the 500 companies in the S&P. We don't say, actually, you shouldn't be invested in these three and you're only going to get the S&P 497. You get the S&P 500. So we don't choose which companies they invest in, the client does. Our job is to manage the risk around that and to help them with, managing tracking error, et cetera, and various technical things. The point that I'm making, though, is that we expected, and we set this out in January, we expected to see a transition from legacy kind of plain vanilla products like the S&P 500 and a transition from those to more sustainable versions of the same thing. So something like the S&P 497, which would screen out some of the worst performing companies in the S&P 500. And, the argument being that over time you would expect those companies to outperform because we believe that more sustainable businesses are going to deliver stronger shareholder value and stronger returns. That transition is going to take a long time. What we've seen, though, with that huge drop in the market that I talked about earlier, everybody rotated out of risk assets and went into cash just because there was so much uncertainty, and so they needed to kind of withdraw from the market. And so we saw massive, hundreds of billions of dollars flowing into cash products. as the markets are improving and coming back up, so we're seeing a rotation back into risk assets. But really interestingly, what we're seeing is that a huge amount of that rotation back into risk assets is going back into sustainable products. So I think what this COVID-19 market dislocation has done is it's accelerated the transition from those legacy products into the more sustainable versions of our product mix. And so hopefully what we're going to see is a much quicker and bigger transition into sustainable investing as a consequence of the market conditions.
And then, Lisa, you kind of touched upon this, but this is a question for everyone. There's been so many headlines talking up, right? How COVID-19 will spur this green recovery, and us, organizations, institutions are going to be building back better. Bold and fighting words there. But on the other hand, we're already seeing some government stimulus packages being rolled out by some of the largest economies in the world, really diluting the commitment to sustainability and environmental initiatives of some of the largest companies of the world as well. So is this just, our community talking within this green echo chamber, or do you really think this is going to happen? And Lisa, because you brought it up first, I'll go to you first. Do you think the green recovery, building back better, is going to happen?
I mean, yes, I certainly do, and I mean, just to perhaps also before coming to that, and also to say a few words on how it has impacted our own sustainability agenda, and I mean, like already when we entered the year, I mean, we were already well underway, of course, but similar to what Ryan was saying is that we actually just see the the sustainability agenda just really accelerating now, and I mean, we already last year and that was also, of course, why we were stepping up our own ambition level, is that we see so much more demand from both our customers, but also investors as well as employees, that they have totally different demand now on companies and sustainability, and to really kind of integrate sustainability in a 360 degree. So and I mean, of course, I mean, I'm in the renewable energy industry, so I think it's a relevant question. Are we talking in a green echo chamber? But I honestly do not think so. I mean, we have customers. I mean, not only the big utilities, but also big consumers that are also very much continuously looking into how to make their own operations more sustainable and more green, and where they look at renewable energy as a key solution for that. And so no, I definitely think this is getting rings on the water. I mean, beyond the green industry, so to say.
And then, Alexandra, do you think we're heading in for this positivity around a green recovery? Is this going to happen?
Yes. Well, of course, I share the hope of my co-speakers. I think it's not going to be automatic, and I think we should not make people think that everybody is aligned as we want to. I hear from a lot of people that there are companies who say that they have to make choices, and I think we cannot forget also. So there is definitely a movement, especially in Europe, that is strong around that issue. But we know that these are global issues, and we will have to find global answers. So there is still a lot of fights to be fought, and a lot of awareness raising necessary of that. Yes, it has to be a green recovery. It has not just to be a green recovery. It has to be a whole major transformation of our societies that we need to lead. But I do not think that this is as common ground and as generally already almost done. I think there is a lot of work and mobilization still necessary to bring everybody on the same page.
Great. And then Ryan, how is BlackRock supporting this green or this societal recovery?
Well, actually, there was an article that came out yesterday on Reuters, and noting that we have in Europe alone, we have pumped 16 billion euros into businesses since the COVID crisis started. So about 3 of that is in equity and 13 is in credit. And these are recapitalizations to support these businesses as they try and deal with the kind of economic dislocation of what it is that we're seeing. So, you know, we're not, of course, we may not do this to be charitable. The only basis on which we may do it is because we see an opportunity to deliver value for our clients who've entrusted us with their retirement savings. But, you know, one of the huge benefits is that, you know, we do have the scale, we have the access to be able to approach these businesses and help them with unlocking you know, the investment required in order to help them get through this. And there are a number of examples. One of them was mentioned in the Reuters article yesterday, is a UK restaurant business that operates restaurants in airports and train stations. So of course their customer base evaporated overnight. And BlackRock came in, led the shareholder rescue package, got the banks to unlock the lines of credit, and you know, that saved 42,000 British jobs. So, you know, there is a huge amount of very positive action that the asset management industry, not just BlackRock, of course, but all asset managers who are stepping up and looking for ways to support these businesses in which their clients are invested.
Great, thank you for that. And then I want to talk a little bit about the next generation of talent. You know, when we talk about the sustainability agenda, purpose-driven communications, the green recovery, a lot of focus is being given on the next generation of talent, your current and future employees from a millennial generation who are very committed to working for purposeful companies and organizations and want their business leaders to take a stand over tough issues around societal justice and also purpose. How are you as organizations attracting and maintaining that talent? You know, how have you perhaps tailored or tweaked some internal initiatives to really ensure that you as organizations are living and breathing your purpose, so you can ensure that next generation of talent who have purpose remain in place and continue this great sustainability agenda you are all pushing? Lisa, I'll go to you first.
Yes, so I mean, as I was mentioning before, I mean, one of the key stakeholders to why we were also, stepping up our ambition level on sustainability was really the demand that we see from our current employees, but also very much what we identify as our future employees. And as you said, I mean, there's so many studies out there, just telling that story that the millennials, and perhaps not only millennials, but younger generation in general, I mean, for them, it's key that their future employees is also sharing their same values. So that has been something that we looked at very, very carefully when we were developing our sustainability strategy. But I mean, one thing is, of what is absolutely key is to have the full commitment from the CEO, because I mean, if you really go out there and claiming to take the space as a sustainable leader, I mean, you certainly need to walk the talk. And what we could see from some of our more younger employees is that they joined Vestas because they were really, really strongly believing in a more sustainable future, but perhaps after a while, since they joined the company, they felt that there were still some things lacking in how we were actually running the business. So that we now, with the sustainability strategy and the different goals that we have targeting different areas, environment, but also social issues, is now supported by a very clear kind of organizational structure to make sure that we have the entire business involved to really support the execution of our commitments. we also having taken measures in place that to make sure that we is not only within quotation the CEO that is really vocal, but that we also involve the entire executive management. But then, I mean, it's what we're also very much focusing in now is like, how do we make sure that we actually engage employees in the company on all levels? So not only the people that are, you know, directly involved in making sure that we reduce CO2 emissions from heating up our factories, or you know, transitioning our service vehicle fleet to more sustainable vehicles, but actually an employee engagement program that allow every single 25,000 employees to actually be part of this journey, and that is something that we are going to spend a lot of time on now in the second half of this year, and look at different ways to make sure that everyone can feel that they are a key part of this journey.
That's great. And Alexandra, how is L'Oréal engaging and retaining and motivating that next generation of talent?
Well, I think it's admitted by everybody that the young generation is extremely motivated on this issue. Well, I don't know even if I want to, you know, say it with these words, because I just think that actually it's more us who are disconnected. What is very clear is they listen to science, they have heard the message, and they expect us to live up to what is necessary. And that is what we try to do. So it is about hearing what science tells us and doing what is necessary to respond to the environmental and social crisis. And of course, everything that Lisa has said, well, that we all know that our employees need that. So I think that is something that we have succeeded in the last years to allow to transform our jobs and transform our way of doing business sufficiently so that everybody can contribute, and we will continue to do so. I think what is more at stake today is, well, our employees actually, they are quite proud, I have the feeling, at L'Oréal, and they want to do more. But I think what is really at stake is the reconnection with society and with the younger part of society, because they have a very clear feeling of that companies are not the good guys and are not doing what is necessary. And I think that is, of course, true for some companies who are not taking the challenges on, but a lot of companies also try to really give a positive contribution and transform themselves and do the right thing between contributing to create value and lead the transformation. And so I think we have to be able to reconnect with that part of society, because they are our future, not just in terms of employees and consumers, but as building a society that functions for everybody.
Yes, I completely hear you there. That's great words. Ryan?
I mean, not a huge amount to add, really. I think Alexandra and Lisa have said it. I think there's a big communications job to be done here in terms of positioning the brand as one that appeals to that younger generation. I think our CEO, and I can't claim any credit for this, this started long before I arrived at the company, but our CEO writing in his annual letter to chief executives about the importance of purpose, and clearly he's writing from a shareholder's perspective, but I think the point remains, the importance of purpose for a business, I think has helped to position the BlackRock brand very firmly in the territory of a business that embraces and understands the power of social purpose. And so I think that's done a lot for us. But, you know, we've done, as you would expect, we've done, you know, a lot of internal communications initiatives. I still think there's a lot more that we can do. And actually, I think there's probably a lot more that all businesses can do on this.
So, okay, I'll let you answer the next question as well. What's next? What's the trend for 2021? What's Larry going to say in his message next year?
Well, I couldn't possibly tell you what Larry's going to write in his letter in 2021, not least because I don't know yet. But I think, I don't know, the world changes very quickly. Things move very fast. So just if you look at the letter that he wrote in 2020, so in January of this year, it was very strongly focused on climate. Climate was the big issue of 2019, I think, and certainly going into Davos this year, everybody was talking about it. When we then got to Davos, everybody was talking about it. When we came out of Davos, it was still very much the conversation. Now we've actually seen a shift. So clearly, the COVID crisis hit. That is not a climate crisis; it's a different type of crisis, but it is no less important from a sustainability perspective. And I suppose if you look at sustainability through the lens of ESG, which I don't necessarily like to do, but nevertheless, it does give you quite a good framework from which to analyze it. Climate clearly belongs very firmly under E. What we've seen happen is very much under S. This has been a huge social crisis and a massive social impact on us. And interestingly, we published some research 2 or 3 weeks ago, which showed that just in the last 3 months, which is a very short time horizon, bear in mind, we're investing over 20, 30, 40-year time horizon. But we published some research which showed the outperformance of companies with a strong correlation to the S in ESG. So, businesses that report particularly strong employee satisfaction, businesses that are particularly active in engaging with the communities in which they operate. 94% of those businesses outperformed their benchmark by between 1% and 3% just in the first 3 months of this year. That is a huge outperformance, particularly if you consider that you can then lever it up, that you then expand that over the course of a whole year and then over multiple years. That's going to give you very, very significant outperformance. So I think what we might find is, whilst 2019 was the year of the E, perhaps 2020 is going to be the year of the S. And clearly with everything that's happened in the United States recently and the spotlight that's shone on diversity, and particularly racial diversity, as an issue, not just in the United States, but globally, and not just in the last few weeks, but over decades. I think, that's a very interesting area, I think, for us as investors to explore.
Okay. And then, Alexandra, what do you think a trend would be for 2021 as we emerge out of this COVID era?
Yeah, well, honestly, I hope that very soon we will have not annual trends, but just long-term perspective on issues. Because I completely agree, of course, with what Ryan said, and I think all the social and diversity issues are extremely important because they are a condition to accelerate also on the environmental issues. But I hope that the trend is going to be that we do not. We are not satisfied by partial responses, but by just profound transformative policies, and that everybody is aware that this is not going to happen in a year. We are talking about 10 years of changes and transformation. So what I think probably is, for me, the trend is that are more societal trends that will have consequences for companies. Meaning, we'll listen to scientists. Science is going through a comeback, and that's a good news for us. So there is, of course, the awareness that all this has to happen at the same time, and that I think the acceleration is going to come from the younger people, as we said before, who do not accept any such excuses as this is not possible, or we cannot do this, because we have seen that we can do anything. We can close everything, cut down everything for 2 months when it's necessary. So that is what people will keep in mind, what younger people will keep in mind, and what they will expect us to do.
Great, thank you. And Lisa, what do you think?
I think, looking at the trend for next year, I think that more and more people will actually compare the just as the Economist did a couple of weeks ago in one of their articles called "Seize the Moment: The Chance to Flatten the Climate Curve," where they actually were drawing parallels between the COVID-19 crisis and the climate crisis, and basically their key message was that governments need to be better prepared for the worst. So I think there will be more of this understanding. But otherwise, in general, I also think that there will be more and more scrutiny of company sustainability commitments. I think the years here of the years that we have seen with some greenwashing will be increasingly difficult. I think, or at least I hope, that there will be a more rigid process to be allowed to actually apply the SDGs. I hope that it will be less used as a marketing branding tool, but actually something that would drive new and real change on a company level. As an example, to just say what we're doing ourselves is that we, in order to, for us to deliver on our carbon reduction commitments, we have said that we're going to do this without using carbon offsets, really to kind of make sure that we don't take any shortcuts, but that we actually deliver real action. I actually think that there will be more of this to come next year.
Yeah, that's interesting you say that. Companies certainly need to be, or are held up to a greater degree of accountability, and we're obviously heading into the decade of delivery for the Sustainable Development Goals. So I think a spotlight on each of those 17 global goals. I'm not sure if we've got time for just one question, because I think we've covered a lot of the questions that came in our conversation. If I can, Alexandra, I think you touched upon this one, so I'm going to come to you. There's a question that came in. There's certainly a move to supercharge sustainability in regions like Europe, and I think you kind of touched upon that. But do you see the same intensity in other markets? You're on mute again, sorry.
I didn't understand.
Sorry, there's been a move to supercharge or raise the visibility around sustainability in Europe. Do you see that across other markets as well?
No, I think you're right that there is a very strong awareness in Europe on these issues, with a lot of pressure from civil society, from consumers, from politics, according to it. I do not see the same level of pressure in other markets, but I do think that it will be possible that transformation are happening sometimes faster in other geographies. So I'm particularly thinking of China. And so there can be a very fast awareness around this issue, with very fast policies putting into place. And that's what we should all hope for.
Great, thank you. I think we're at time. Is that right, Liam?
That's correct, yes, Ravi, unfortunately.
Great, well, thank you so much to Alexandra, Lisa, and Ryan. It was a great conversation, some great thoughts put out there. And thank you very much to Liam, you and your team at Ethical Corporation and Reuters Events.
Thank you, guys. Thank you for such a great discussion. And Ravi, thank you for hosting it.
Thank you very much.
Thank you.
Thank you very much.